Oil prices look set to snap the losing streak, which saw every single month this year end in the green. This market continues to be volatile without any true direction, but is there a bigger move on the way? Welcome to our market analysis videos here at ZenFinX. For those who are new to the channel, my name is Colin. I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. In today's video, I'm going to look to give you a detailed insight into the fundamental and technical outlook for oil prices. By doing this, hopefully it will give you inspiration for your oil trades in July. Enjoy. Okay, let's look at the themes dominating the markets at the moment, and one's likely to stick out really like a sore thumb to all of us, and that is inflation, which is impacting pretty much everything and everyone at the moment. And when you think back to the low demand prospects of the pandemic, oil traded at below $10 per barrel, and in fact was negative at one stage. And since then, of course, we've had demand prospects picking up massively, trading well above $100 now. And although the demand prospects still seem robust, I'm just wondering whether inflation is now really and truly starting to hit the consumer. Could this reduce oil demand and therefore relieve the price? Well, it's certainly an interesting debate, and although oil is price inelastic in demand, which basically means that demand is less responsive to changes in price, we need oil. I'm just wondering whether the inelasticity of demand is starting to fade just slightly as pickup in prices is quite high. Now let's take a look at the intervention of governments and central banks. And as you may know, central banks all over the world are hiking interest rates to curb these inflation figures that we're seeing, bar Japan it seems. You've probably seen their interesting policy stance. Anyway, will the Federal Reserve take its foot off the pedal if inflation shows to be peaking in the next CPI report? Either way, this is going to cause volatility in the markets. And looking at governments, US President Joe Biden has called on Congress to consider a 3-month suspension of the federal tax on gasoline, and also asked states to suspend fuel taxes. If we continue to see evidence of government stepping in to help cool oil prices, to provide relief to the public and the cost of living, then oil prices are likely to obviously cool off as a result. Now, when you combine the key themes right now, it feels to me like something needs to give soon. We're stuck in this range, which you're going to see in a minute. Despite the high inflationary pressures, oil demand has remained strong, so it's hard to see and it's hard to be a convincing seller anywhere near the 100 level, especially with the psychological support that it provides. Also, there is a chance that inflation shows it's peaked in July, which could mean less intervention from governments as consumers have greater purchasing power. And as a whole, I remain bullish for oil, but there are some massive levels to watch out for. Let's take a look at those now. Okay then, so here I am on this oil chart right now, and I'm on the monthly chart. First of all, just to show you really the scale and the extent of this move we've had to the upside in oil, mainly due to the war in Ukraine. That's where it all started. Now you can actually see that. Look, we're going back to December now. 1, 2, 3, 4, 5, 6 months, half a year of upside consecutively each month. But now we're tailing off slightly. We're having a little pause. I think that's completely normal from any technical standpoint. It does highlight to me, though, that unless we see clear evidence to suggest that oil is bearish, I'd like to see another monthly closure below 100 to confirm that maybe oil is going to slip off slightly, and that would probably heighten inflation and recession fears. Apologies. Now I want to go to the daily chart because I've kept my drawings in from last time. First of all, yes, we did have a buy limit, or I had a buy limit here at the 50% of this market imbalance that we have in here. We stopped out. Now normally what I would do is wait for a break of structure. As you can see, we actually traded quite significantly down into this imbalance area without actually any real reaction, so it wasn't probably the best trade to take off the back of that. Normally it's best to wait for a reaction on a 1 hour or 30-minute or even 5-minute chart to confirm that imbalance is actually wanting to push prices to the upside. Now, what I did say as well in my forecast last month is that we wanted to see 125 level be hit. We got to just under 124, so we did make that move to the upside initially. we tailed off towards the end of the month. I think mainly that's potentially to do with government intervention, especially over in the US from Joe Biden. We can delete this sort of flag structure we had now because we have broken out from it. And something that I noticed, which for me is quite key for the, I want to keep that level in because I still want 125 to be a target, but I'll discuss that in a second. Now where we are at the moment is we seem to be having this, anytime the level of oil reaches sort of near this 100 level, we see buyers stepping in. Now that for me is a sign, obviously, that of course this around this 100 level, we can start buying the market potentially from this level and targeting, I think, around 125. Now, what I find quite significant is each time the market's sort of made a move towards this 100 level, it's created sort of a new higher low, and you can see that here. You can see that here. Now, probably a move we've missed now, but this level here, and I'll delete this one, is our daily order block here. Now for me, this daily order block needs to hold. If we're going to get a situation where the price falls below this order block level, maybe it could be a liquidity grab of here, and we move down towards these levels here. But once we start smashing through 1 low, 2 low, 3 low, and if we get a break below this 92 level, that for me is the sort of bearish confirmation, probably a time where recession's going to be really likely. So with that being said, any selling levels are going to be just below this wick here, down at around 89.90. If we get a break below there next month, then we're going to be opening up this price action here, which looks like it could smash through. Alternatively, this order block holds and we get a move up towards the 125 level, potentially grabbing liquidity, which we see up here. Always having a look at where the liquidity is. This liquidity up here. If you can get a break above that, a grab of liquidity from the 125, then I'm a seller up here as well. Of course, we have this high from March 2022, the 130 level. I mean, I'm not sure we're going to get a break above there in July, but I think we could get a broad move towards 125. If we go onto the hour chart, where can we get this buy opportunity potentially from? You can see how balanced this price action is, right? So if we do get a fall below probably this wick, and I'm going to say this wick here, then we're going to be looking for sells. Alternatively, what I like is buying from this level, 107-ish level, stop loss below that wick here, targeting the highs as we go. We're going to target the 118 high for a 3.75 risk reward trade, and we're going to target the 123 level, last month's high at 5.38, and a bit more optimistic 125 level, so taking money off and taking profits off as we go, and of course always staying risk managed. This is just how I'm seeing the markets. So they're my plays for oil, they're my key levels to watch out for. If you've liked this video, make sure you've liked and subscribed to the channel. Hit that thumbs up button, hit that subscribe button, and more value like this will be coming out. If you want daily free market updates, there's a free Discord link in the channel as well. Make sure you check that out. We do live trading in there. We analyse the dollar every day, provide some trade analysis. All these videos go in there as well, and videos from our other social media, so make sure you check those out. Other than that, have a great trading day, everyone. I'll catch you all for the next video. Cheers.